Wednesday, March 23rd, 2022, Maneco 64, home of alternative economics and contrarian views. We're going to look at the yen carry trade, which is something I have covered in the past a few years ago. It went off the boil, but now it's coming back. And the yen carry trade, or Japanese yen carry trade, is coming to the rescue of risk assets at the moment. And some of you might not know what that means. And that's what we're going to do today in this report. We're going to look at the yen carry trade and try to explain to the public what it really is. Before I start, though, I like to ask you to comment below. What do you think of this camera that I'm using? I'm using a new camera, a new microphone. It's easier for me to do that. And I'm using Zoom here so I can share the information more easily with you so you can see it live. For example, the reporting of the prices in the market report that I do at the end. Yeah, let me know, or else I'll go back to the old way. You might not be able to see Billy as well as you can usually, but he is here. And I wanted to look at a book as well after we go through the Japanese carry trade, yen carry trade. I want to quickly look at this book here, The Triumph of Gold by Franz. And the reason I want to do that is because there was a comment yesterday, and we'll just go through that. So yen carry trade. What is the Japanese yen carry trade? Well, some of you might know the Japanese central bank, the BOJ, the Japanese government, they've been conducting a real inflationary monetary policy since the collapse of the Nikkei back in the late 80s, early 90s. Not only the Nikkei, but the collapse of the real estate bubble that we had in Japan in the 1980s. I remember that really well because I was already an adult, a young adult at the time. Remember hearing how the Japanese were buying up loads of real estate in the US, for example, because I play golf. I knew they bought Pebble Beach Golf Resort. And there were statistics or facts that the property of the Japanese imperial family, the imperial palace in Tokyo, at one point was worth more than all the real estate in California. So things went crazy. And I remember very well in the early 90s, before I even got into the Austrian school or really free markets, even though I believed in free markets at the time, I hadn't really gone too much into the study of it. Many people, even the Keynesians in the West, were saying the Japanese have to let their banks go. They keep bailing out their zombie banks. That's where zombie banks originate from. They were the Japanese banks that are still around, that were bailed out by the Japanese taxpayer, by the government, by the Bank of Japan. And Japan has the most debt in terms of the government per GDP of any country in the world. And how have they kept going? Well, I think they've kept going because the Japanese public domestically are big savers. Japan is still a big exporting country. So they didn't let things flush out. They did the wrong thing, and they've kept doing the wrong thing since then. And you might ask, well, Japan is still a wealthy country. Yes, the demographics aren't great, of course. Japan is getting older and older. Population isn't really growing that much. And you've got to sustain retired or pensioners. And the economy is not buzzing along. You've had zero or negative interest rates for decades. They were the ones who really kicked off QE probably back in the late 90s or early 2000s. So, and they're still at it. So that's a little bit of background on Japan. What about the carry trade? Well, prior to the crazy policies in the West by the Fed, ECB, Bank of England of zero or even negative rates, Japan led the way. So they've had this crazy policy of QE, zero rates, well before we went into it. So in the foreign exchange market, for example, when you sell a currency, you're actually borrowing it. And when you sell that currency, of course, you're going to buy another one. And then with the proceeds of selling or borrowing that currency, you take those proceeds and you buy riskier assets other than cash. You buy stocks, bonds that give you a return in the stronger currency. So the Japanese yen has been always very cheap to borrow. So it's kept the Japanese yen weak. The Japanese government, big corporations in Japan, of course, they like that because it helps their profitability. But what it does to the general public, it keeps the general public, I think, cost of living higher than it should be because they're paying more for imports. They're not getting a good return on their savings, 0%. Can you imagine if all the Mrs. Watanabes of Japan, which is a term used for the pensioners in Japan, could put their savings at 4, 5, or 6%? That might actually kickstart the economy a little more, the domestic economy, but the Japanese have never done that. So in periods of market uncertainty, and by that, I don't mean Japanese market, but world financial markets uncertainty. The Japanese central bank has always come to the assistance of the whole system. After all, Japan is a client state of the United States. I don't want to sound nasty about the Japanese, but the Americans are still there militarily. And the Japanese do what they're told, unfortunately. So up until maybe 2008, the Japanese yen carry trade was very important to the health of the world financial system, and maybe even a little later after that, because if the Japanese yen strengthened too much, that meant that a lot of these carry trades, and when you put a carry trade on, you're short the Japanese yen, you get the dollars and you buy stocks, bonds. But if the Japanese yen starts appreciating or the dollar starts falling, a lot of these carry trades become unprofitable. You start losing money. You have to get out of them. So you sell stocks, bonds, derivatives, and it creates a lot of volatility. And people get out of risk assets. And so what's going on now is that with the Federal Reserve, the Bank of England, even the ECB, talking a lot more hawkishly because of inflation. We're going to look at that as well today because we've had inflation or price data come out of the UK. The Japanese haven't followed suit. So they've kept their policy, the Bank of Japan specifically, and I'll actually share something with you here now. Let me get this. Okay. Let's share this. So here we go. So this is from yesterday in the FT. Yen hits 6-year low against dollar as Fed signals aggressive rate rise. Haven state is undermined as global monetary policy drives currency down. Not sure why they think the Japanese yen is a haven currency. Let's zoom that, but let's go through it. The yen hit a 6-year low against the dollar on Tuesday as the hawkish tone of Federal Reserve and its determination to curb inflation convinced investors that Japan's currency may have to fall further. The currency fell to, the dollar rose to 121 yen. That's the confusing part of FX. The chart is actually going up. It's the dollar going up, the yen going down. So the dollar now fetches like 121 against the greenback, its lowest point since February 2016, after completing a near 5% decline so far in 2022. Shuzuki Yamada, head of Japan Foreign Exchange and Rate Strategy at Bank of America, said the bank's latest forecast put the yen at 120, or the dollar at 123 yen by September. I mean, it could reach that by the end of this week, I would say, not September. Gaps in global monetary policy. There you go, are behind the move. Fed Chair Powell signaled this week that the US Central Bank could move aggressively to raise interest rates in a bid to contain surging prices, while the Bank of Japan Governor Haruhiko Kuroda maintains a more cautious stance. At the same time, surging crude oil prices have been weighing on Japan's current account, with the country in January recording its widest trade deficit in 8 years. So that's unusual. Japan usually has a trade surplus. So yeah, and what this does is that hedge funds, traders, mutual funds, family offices, whoever, they will call their banker, be it Goldman Sachs, JP Morgan, Bank of America, whoever, and they'll borrow in yen because it's much cheaper to borrow in yen. And by doing that, they're selling the yen, getting dollars or euros or pounds, and buying assets in those currencies that are returning more. And that's the yen carry trade. And the only problem with that trade is if the yen were to reverse, if the Bank of Japan were to change its mind, if they've gone too far in being accommodative in the short term and they reverse a little bit, it could cause an unwinding of that trade and an unwinding of the risk trades being put on. So that's the Japanese yen carry trade. It hasn't really been used as much in the last few years because everyone has been lending for nothing. But now the West is tightening things, or trying to tighten. So I'm going to show you now the UK inflation data. While they call it inflation, I call it prices, because by now, hopefully, you should know the difference between inflation and rising prices. Inflation, of course, is the increase of money and credit by the central bank and government. And what they call inflation, the mainstream and politicians and bankers, is really the consequence of inflation, rising prices. So I remember very well, because I've been around for a long time, that this number here, the RPI, was the one that was looked at. And that was in the early to late 90s. So that number is the retail price index. That includes council taxes, rents, everything. And that came out at 8.2, was expected 8.2, but it rose from 7.8, almost up 1% on the month. But then they decided under the new Labor government that came to power in 1997, they tinkered with the statistics. The RPI was getting too high. So the CPI is always 1% lower, but now it seems to be 2% lower. And it doesn't really reflect the rising cost of living. But even that, they haven't been able to keep down. The last number was 5.5% increase year on year. They were expecting 5.9. It came out at 6.2. So not great at all. Let's have a look at PPI. PPI is in double digits. There you go, 10.1. I like the way they put all these core numbers and they put the RPI right at the end, so people don't look at it. It's just people like me that look for it, really. But I wanted to show you as well, because right now, the UK bond market is pretty much under control, which is very strange, with inflation, or if you want to call it, prices rising at really almost double-digit levels. We're still only getting, just less than 1.7% for 10-year money, or UK government can still borrow at 1.7. And why is that? Well, because I think there's still a lot of manipulation. Maybe who knows? The Bank of England is borrowing in yen and buying. They're selling their currency and buying, gilts. They're saying that they're not doing any more QE, but yeah, this is really crazy here, that we should be at double-digit rates, but I think mortgage rates are going to continue to go higher. So just wanted to show you that. And before we go and look at this book, just wanted to show you the price of gold in Japanese yen, because, people say that Japan has been in a deflation, and, the FT noted that the yen is a safe haven currency, but I'll prove to you that that's complete fabric. That's not true. And to do that, I'm going to share with you the price of gold in yen. And there you go. That's the weekly chart. And that's going, this chart only goes back to 2007. I think when the troubles in Japan started in the early 90s, it was around 60,000. The price of gold in yen. And you can see now we're almost at all-time highs. We reached the all-time high the beginning of this month. So you can bet, yes, the Japanese bank, big investors, insurance companies, all those top elite institutions are going to keep going, but it's the general public that's going to suffer, and they really don't need to suffer. But unfortunately, the Bank of Japan is just another central bank, and they're going to do the wrong things for the general public. That's why you shouldn't trust the central banks, nor the bankers, nor politicians. They're all in this together. And this, I'm not saying and this is why I tell people that you need to have a little bit of gold, if anything, a little bit, to protect yourself. Can you imagine leaving, your yen in the bank and seeing this happen? Well, there you go. So now to the book here that I talked about, The Triumph of Gold. Someone made a comment yesterday. I guess this is a response to that comment. He said, oh, you are always, no matter what, you are optimistic about gold. And I replied, well, not really that I'm optimistic about gold, but that I'm pessimistic about fiat currency, because fiat currency always goes to zero. So that's why I think it's always important to have some gold. And in this book, The Triumph of Gold by Franz Pick, in the introduction by Henry Jarecki, this is what Mr. Jarecki says about Franz Pick and what they used to talk about. And this is on page 1. It says, he and I often argued about its randomness. I saying all of life was unpredictable. He saying it was obvious destiny. To defeat my skepticism, he repeatedly cited his two somewhat diverse educational inputs. His hometown rabbi, whose Talmudic teachings proved for Pick that every currency was doomed to be unstable. And second, the 19th century Prussian economist Georg Friedrich Knapp, who believed that money, I would say currency, was an instrument of state order, that its value reflected the public's attitude toward the state, and that given man's failings, and thus the state's, the only road a currency could go is down. So there's the answer to that comment, really. With that, let's look at where the markets are this morning. It's 8:30 a.m. London time. So I'm going to share the screen with you guys, and you will see everything live. So when this fit, okay, here we go. So we've got, as you can see, spot gold 1921.43. It's unchanged exactly. High has been 1924 and the low 1915. Yes, you would think gold should be a lot higher with these CPI numbers. But yes, we did peak a few weeks ago. We've made a double top. I think we need to be patient. We shouldn't worry so much about the fiat price in any currency, because as the book said, you know, fiat currency is a reflection of human nature, and human nature is always fallible. Gold and silver are not fallible. They've been around and they've maintained purchasing power for thousands of years. And that's why, you know, I keep some gold and silver. Yes, I do keep fiat currency in the bank, only for necessary expenses, of course. But today, with that negative real rates, you'd be crazy, I think, to keep too much in the bank. Unless you had to perform, you know, to buy some asset and you needed the liquidity in the next month or two to, you know, to transform that fiat into an asset. Yeah, I wouldn't look to keep too much in there. So silver, well, silver is up 20 cents right now, just under 1%, as you can see. Just below 25, high's been 04 and low 66. The Dow future is down 65. The NASDAQ is down 37, and the S&P 500 is down 9 points. So fairly quiet. The FTSE continues to move higher, above 7,500 here, up 0.5%. Euro Stoxx 50 is up 3 points. To the currencies, well, sterling is down 0.2, 132.37. The euro is virtually unchanged here at 110.18. The dollar is up 0.2 versus the yen, just around 121. It has been as high as 121.42. So if you see this dollar yen rate go down, what will happen is that the stock market will also probably go down, because people are selling their dollars and buying back their yen. So that's the unwinding of the yen carry trade. So I think we need to keep an eye on that. And if we see it go the other way, if the dollar rises, that will help the stock market for now. The dollar is pretty strong against the yen, the yuan, sorry, at 638.78 is up 0.2%. We'll move to the other currencies here as we go along. Aussie dollar is down slightly at 74.58, as you can see, and the dollar is up 0.15 versus the Canadian at 125.85. And down here to the Kiwi dollar, it's down a quarter at 69.46. WTI crude is up 0.2%, just around 110. Brent is at 113.50. Pretty big spread there. It's up 0.5% as well. And high grade copper doing very well, up 0.75% at 4.73. So, and to finish off, we're going to look at the US bond market. Yesterday, we continue to see yields rise quite significantly. And right now, as you see here, the 10-year yield, it has come off the highs. It went up to almost 242, as you can see here. And right now, it's unchanged at just under 238. Let's look at the 3-year. So it's pretty much flat here. It's not inverted, really. The 3s, 10s. The 2s, 10s are still normal, but it's flattening very quickly. and the 7's10 is inverted. So there you go. If you enjoyed this format or new camera and microphone, please let me know. And if you enjoyed the video as well, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.